Welcome to the 2020 Economic Depression and Preparation Channel, 2021 Economic Depression Channel. I'm your host, Tony. Thank you for joining me on this December 15th, Wednesday, middle of the week edition. I know it's been a while. Thank you for your support during this time in the holiday seasons. I know many of people are getting ready to travel and do various other things as we try to wrap up 2021. And today I just want to talk to you about two items of business. The Federal Reserve meeting today, as you know, we're experiencing high periods of inflation. Inflation is almost at 7%, just as we predicted that it would be closing in on 10% real inflation before 2021 ends. And just as we also predicted, the Federal Reserve has come out today and said that they're going to be raising interest rates 3 times next year, possibly even more than that. And also prices, you've been feeling it in food, energy, utilities, transportation, and commercial and retail goods. And inflation continues to rise. And so we're going to be talking about those two measures today briefly today as we get in our midweek session today. Thank you for joining me. Please be sure to hit that subscribe button. Preach to me for the latest 100% true financial news that's simple, easy, and relatively easy to break down for everyone. And I thank you for your support. So now, let's get right into it, ladies and gentlemen. The first article here is the Fed will aggressively dial back its bond buying purchases, seeing 3 rate hikes next year. Federal Reserve Chairman Jerome Powell came out at 2:30 p.m. Eastern time with this announcement. He said that the run of, quote, easy, ultra easy policy since the beginning of the pandemic is coming to a close, and that they're going to be making aggressive policy moves in response to rising inflation. Now, you know that in 1970s, Paul Volcker had to do the same thing. The numbers got up to 20%. Inflation right now is at 7% and rising even as we speak. Like I told you, we're going to hit 10% by the end of this year into January 2022. Real inflation is at 15%, as you know. And we have this conundrum of a shipping crisis. We also have the conundrum of the Fed will be scaling down their purchases of bonds. As you know, they'll be buying 60 billion purchases of bonds, where before it was like 120 billion. So they're coming down on that. They're doing some tapering here. But they got to be careful not to upset the stock market. They leave rates unchanged at basically 0% for right now. Okay. But in March, many economists and many leading experts expect that to change. And that's when they're going to start raising this thing up, raising the interest rates up. And it's going to be a terrible thing again, because guys, you know, and I know that with these prices going up, wholesale prices measured 9.6% rose in November from a year ago. And this is not counting, you see, the CPI, the core producer price index, does not count food, energy, and housing costs, you know. And this is the thing that you have to understand. So even with all of that taken out, this thing still rose 9.6% in November. We are going to be seeing and the thing is about this, if you remember my earlier videos, I said that this is going to be a massive deflationary depression, just like in the 1929. It is. But instead, what we're going to see is, of course, is a bit of hyperinflation before the big crash happens. It's almost like a balloon. You know, you take a balloon and you keep blowing air in it, pumping it up. And then one day the balloon decides this is as far as I'm going to stretch, and boom, the whole thing deflates. This is exactly what this economy is going to do. If you remember Venezuela's economy in Caracas, Venezuela, their stock market melted up to 50,000. Okay, the Dow Jones is at what, 35 and change right now. It's melting up right now. This is the melt up. Now the melt up could last throughout the end of next year, but after that, from 2023 to 2025, all bets are off, ladies and gentlemen. That's when I believe that the major crash is going to happen. And then from 2025 to 2030, it's going to be major depression, and they're going to try to do rebuilding. That's when all the money is going to be spent from the Democrats on this, what's the bill called? Build Back America, better or something like that. All the money is going to be spent from the stimulus, all this Build Back America stuff. And it's going to look great in some parts. The infrastructure is going to look great in America, but these other cities are going to become wastelands because all the money is going to be spent. There's no more money to be tapped on the dollar, and the dollar is going to be essentially worthless. We're 50% less than what it is right now, unfortunately. So this is what we're looking forward to. But the good news is we still have time to prepare. The good news is that the Labor Department said that the jobless claims have been holding steady around 200,000 jobs, initial jobless claims, and that's a far cry from when it was at its peak back 2 years ago. If you remember, we started this thing in March 2020. It was at, I think they were losing something like 2 or 3, 4, 5 million jobs or something like that a week. And so we've come a long way. So that's the good news. Bad news is that the rates are going to be going up, and the days of easy money for these big banks and big corporations, they are ending. And a lot of people are looking very, very worried and concerned about their personal finances. So if you can band together with family, friends, and learn survival skills, Learn to grow your own food, because food prices are going to continue to go up. Even if you have an apartment or a condo, you can grow your food on your porch and the patio through hydroponics and other ways. Okay, and also if you have your own land, great. If you have a ranch, great. Get some more solar generated power things, because so you won't have to worry about your future. And also in terms of spiritually, you want to be prepared. You want to have prayer with God. You want to have your time, because churches may be closed again. As you know, at the height of the pandemic, a lot of churches were closed of many faith and mosques and synagogues because of the the health crisis. That is going to be coming back again, because they're going through every letter of the Greek alphabet. I think we're on Omicron now with this thing. Now we're going in probably to another variant. So guys, get prepared in that way as too. So I just want to touch base with you that we're still here. We're still working on our plans. I'm working on my plans as well. Nothing is perfect. Nothing is fail proof. But in a depressionary, in a hyperinflationary environment that we're going to be into this year and next year, you want to shore up in hard tangible assets, real estate that you own, even some things as tiny houses, they may be good to invest in, because people are going to be looking for cheaper alternative means of housing. As supply is short, and single family homes, single family homes are short. And also you want to be looking at cutting down your energy costs. And maybe you can go to instead of getting the big gasoline SUV, maybe you can go get an electric vehicle, get some tax breaks that way. Maybe not a Tesla, but something, they have other makers of electric cars, as GM and Ford and other people. So maybe look into that as well. So I just want to touch base with you to hang in there. Inflation will continue to rise to above 10% before this thing next year. They're going to be doing cuts next year. I predict inflation will be 12% by March, and that's when the Fed is going to make two raises to the interest rates, okay? And then the third raise they're going to make is in the summer, June and July, and then another raise before we even get to Thanksgiving next year. So look for that, ladies and gentlemen. And if you have any questions about how to prepare for a hyperinflationary environment for the next 2 years, leave the comments down below. What do you think it's going to be, and what are you doing to prepare? Stay safe, be blessed. Thank you for listening, and I'll talk to you very soon.